Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Welcome to our special interview with Peter Dunworth, where we will be exploring the fascinating concept of valuing Bitcoin as the world's first triple point asset. This episode is brought to you by River, the financial institution built for all time. Head over to River for zero fees on recurring orders. All Bitcoin is backed one-to-one in multi-sig cold storage. Your Bitcoin is your Bitcoin to withdraw in full at any time. River built and owns their own infrastructure. River has US phone customer support. This is where the Bitcoiners are going for a new standard in Bitcoin. Buy and build your Bitcoin wealth with a Bitcoin-focused company that has been built for generations to come. Use the link in the show notes and get $5 in Bitcoin when you get started today. And for the ultimate in Bitcoin security and design, get the Cold Card hardware wallet from CoinKite and get your sats off your exchange. With built-in sleep at night technology, it's the only dedicated air-gapped ultra-secure signing device for Bitcoin. CoinKite is a leader in security and hardware manufacturer, established block 141,000, and maker of some of the most iconic Bitcoin products. Don't trust, verify. Use the link in the show notes for a discount. And now, get ready for a thought-provoking conversation with Peter Dunworth as we unravel the intricacies of Bitcoin's value as the world's first triple-point asset. Peter also explores the exponential nature of Bitcoin's value and its potential to revolutionize the financial landscape. During this incredible rip, Peter will shed light on how Bitcoin leads us to an event horizon in finance and a singularity in economics.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Based in Sydney, Peter Dunworth is a director of Net Worth Advisors, a multifamily office, and the founder of the Bitcoin Advisor, a cutting-edge business designed to cater to the unique needs of high net worth individuals seeking secure and informed Bitcoin investments. Peter's journey as a financial advisor started as an optimistic and aspirational 20-year-old, initially aiming to become an investment banker. However, he changed his path after meeting a mentor who advised him to move into mortgage broking. Peter began his career in finance straight out of university working at BT Funds. He later set up a mortgage broking business and spent nearly a decade in the field. His father's advisor, who was chairman of one of Australia's largest financial institutions, advised him to move from debt to equity before the great financial crisis. Peter then retrained to provide advice on equities and financial advice, leading him to the financial advice space. In his current role at Net Worth Advisors, Peter manages a dozen high net worth families' portfolios, providing investment advice across various asset classes, including shares, property, bonds, and his all-time favorite, Bitcoin. His unique insights and deep-rooted knowledge in finance have made him a valuable asset in the world of Bitcoin investments. Peter's keen interest in Bitcoin, coupled with his background in finance, makes him a highly respected figure in the ongoing conversation about the future of Bitcoin investments. As a multifamily office manager, he is passionate about delivering good advice to clients based on their goals and providing education on the risks they need to take in order to achieve those objectives. As the driving force behind the Bitcoin Advisor, Peter Dunworth remains committed to empowering and educating high net worth investors, ensuring that they can navigate the world of Bitcoin with confidence and reap the rewards of this revolutionary digital asset. Peter Dunworth, welcome to the Bitcoin Matrix podcast. How are you?
Life is beautiful, Cedric. It's a pleasure to be with you.
Yeah, man. It's great to finally connect. You were one of the first people maybe to DM me about the show in November 18th of 2021. You wrote, wow, I've just discovered your podcast courtesy of JW. Can't wait to get through them. Your pods have an all-star guest lineup. Congrats. And then a month later, you DM just listened to the Knut pod with you. Love that guy. And this was your biggest takeaway. And this stuck with me for a long time. The U.S. printed 13.5 million per minute for the last 14 months, while Bitcoin printed 0.625 per minute in the same period. By your calcs, Bitcoin should be 20 million-ish per coin, you said at the time. That was in 2021. So I'm, really excited to get into this and, get more into your ideas. So yeah, I'm happy to kick it off. Thanks for joining us.
It's a pleasure to be here. I've got to say, I've listened to hours and hours of your podcast, and it's a surreal experience to be on the other side of the mic talking with you. So
very cool. Also, so you wanted to be an investment banker when you grew up, and that's what I wanted to be when I was growing up.
yes,
I grew up watching Family Ties with Alex P. Keaton. And
nice.
I don't remember aligning with him politically at the time, but I loved his pursuit of business and his business-minded sense and just where it was going. And I enjoyed the show tremendously. And I just always had an interest in finance and accounting and economics. And for a while, to be an investment banker. My career took a very different path with accounting and finance and operations, not necessarily investment banking. So it's and I love what you're doing with the Bitcoin Advisor. And that's also where I think things have really taken a turn with your Twitter presence. And one of the reasons I wanted to bring you on the show, because, estate planning and sort of long-term thinking about Bitcoin is really important and maybe not as spoken about as much.
You know what? I think that is a really important thing because, say, from a family office perspective, the first thing we do when we talk to new clients is we basically look at the structures that they hold their assets in. Do they have trusts? Do they have companies? All sorts of things. And the reason why we do that is because that's it's about the only free kick or free arbitrage that you get in investing, because that different types of entities have different tax incentives or different tax outcomes. And quite simply, you can achieve a much better tax outcome by putting it into a different type of entity. And then when you fold on top of that the ability to have some form of asset protection over and above personal liability, particularly in the US, it's very important because it's the most litigious country on earth. However, New South Wales is very closely followed by the US in one of the most litigious states on earth. So those are the sort of two things we look at to get started. And this is sort of free money sitting on the table. And if you can structure things correctly, then you can save yourself a fortune and give yourself the best form of asset protection known to man. Now, why is that important for, Bitcoiners? I think Bitcoiners are going to end up, very, very wealthy people. Even with a very small amount of Bitcoin today, you'll end up being an extremely wealthy person. And by addressing these things straight up front, you can protect yourself long-term from any future litigation. You can create better tax outcomes from yourself. And it only requires a little bit of thought up front to set yourself up for life in these structures and have a lifetime of benefit from it.
And, it makes me think a lot about, especially the long-term thinking, what CK talks a lot about is how no one's bullish enough. And whatever Bitcoin you have now in the future will be worth so much. So you think about like wealth preservation, which we'll get into in a bit, but sat preservation. And just retaining every single sat you have now into the future. Specifically in this conversation, I'm thinking around security and privacy and sort of entropy and just leakage,
Yes.
rather than say maybe decisions around sort of balance sheet management. But I encourage people to think really long term. So I want to get into some of these ideas. And I think first to kick it off, if you could kind of outline your 6-point valuation framework for Bitcoin, maybe we can run through those points.
Sure thing. So this is talking about what I like to call Bitcoin as being the first triple point asset. And what does triple point mean in thermodynamics? The triple point is where an element such as water is in all three states at the one time. So in a beaker, under certain temperatures and pressures, you can have water in the form of water, ice, and steam all at the same time. Now, what does this have to do with Bitcoin? Well, Bitcoin is the first triple point asset in that it is in all three states of money at the one time. It is both a store of value that we typically assess with as gold. It is a medium of exchange. Typically, we use the US dollar globally. and it is also a unit of account. We use double entry ledger systems. And what the very unique thing about Bitcoin is for the first time in history, we have one asset that is the dominant form of each of those functions of money at the same time. So that's what the triple point represents. And I'll go through this framework for thinking about what a triple point asset would look like, an evaluation framework for assessing it. So the first thing we start with is what are the assumptions with this modeling? What do we need to think about? And there are really only two assumptions that we look at with this. The first is thinking about my assumption. First assumption is that there are only going to be 21 million Bitcoin. That's a fairly reasonable assumption based on the fact that it's highly unlikely that hard cap's going to change. And the only other assumption I make is that there are going to be blocks basically continually produced into the future. So we're going to have a block on average every 10 minutes. So they're two very, very basic assumptions. The third part of the framework is basically thinking about what are the tech innovations with Bitcoin that have been a step function change in improvement, and how do those technology improvements impact the functions of money? And so if I look at the four key functions that are a complete game changer, completely novel concept that did not exist before Bitcoin was around, I look at the first is absolute digital scarcity. Firstly, digital scarcity was an oxymoron until Bitcoin was invented. So there was no such thing. However, we do have digital scarcity now, and we have absolute digital scarcity, meaning that we are going to go no further than 21 million. The second tech innovation was the ability to have seizure resistance. And this is such a novel thought and so difficult for us to grasp because we're physical creatures living in a real world. But having an asset that you can effectively leave in your head with 12 words and walk around with and effectively go to the grave with without passing up is a very novel concept. And we don't really understand what the power or the innovation is with that just yet, because we're not Bitcoin natives. None of us are Bitcoin natives. We haven't grown up with it. We've been alive. It's only been alive for 14 or 15 years. So we don't know what the power of seizure resistance is. The next is censorship resistance. And this is the first time in human history that if you apply the rules of the network, that you will not be censored in making a transaction or receiving a transaction. And this is a very novel thought, but has huge power. And the final thing is that we have an immutable ledger, supply and issuance in the form of a ledger that cannot be changed. So some people like to call this a pet rock, but an immutable ledger particularly, and this is one of the things I was hoping to discuss with you a little later on, having an accounting background, the power of an immutable ledger is something that we haven't seen before. And this is where it's going to drive a whole host of innovation and change within the economy and completely change incentive structures when people understand that we have the inability to change what is on the ledger previously. So those are the four tech innovations. And the important thing to think about is how do those tech innovations apply to the functions of money? So the three functions of money that we have are store of value, minimum exchange, unit of account. And if you look at, how does absolute digital scarcity and seizure resistance improve the store of value function of money? Well, it's really simple. It makes gold a better gold. Firstly, because it's digital. Secondly, because there's no inflation rate with it. And thirdly, because no one can take it from you. Now, we don't even understand what those things mean right now, but I can tell you it's far more valuable than what gold is. And gold's somewhere between a 10 and $14 trillion market cap. So that's a very powerful concept. And we haven't actually seen this flow through to the broader society and actually have a meaningful understanding of it. The second function of money, being the medium of exchange, is, as we know it, the dominant global reserve currency is your US dollar. And, we refer to that down here in Australia, and global trade is denominated in it to the tune of over 80%. That's a big deal. But the medium exchange function, although I don't think it's really an important function at the moment for Bitcoin, but there are some tech innovations that completely redefine that. And we've got an immutable supply and issuance with this, which I think is absolutely critical for creating a stable economic framework to make economic decisions on, which is something that we don't have in the US dollar. If we just look at the issuance and contraction of the money supply in the last 3 years of your US dollar, We've probably had a 50% increase in the last 3 years, and then the last 12 months, we've actually had a 7% decline in the supply of money. Now, that has a huge implication for making economic decisions, and all human decisions at some point in time are fundamentally an economic one. So this has a rippling effect across everything, and this is where the meme, Bitcoin fixes this, or Bitcoin fixes everything, is far closer to the truth than we think. It really isn't hyperbole when you look through and understand those things. The other thing that is really important about the tech innovation for media of exchange is that censorship resistance, when it comes to a media of exchange, is of critical importance, because you look at the control that a country can have over trade with other people by being able to censor a network. And this is the first digital network that has zero censorship on it. And that is ultimately a huge upgrade on what the US dollar is. Now, I'm not thinking Bitcoin's going to supersede the US dollar anytime soon. I actually think it's going to help the US dollar contain or grow into a more dominant global currency. So I think they're actually going to be quite synergistic. But I personally think that having censorship resistance and the immutable supply and issuance is a far better concept for economic prosperity than a subjective supply and issuance and non-censorship resistance. And the final thing, which I'm so glad to be talking to you with your accounting background on this, because typically it's a really boring thing to talk about, is the unit of account and the fundamental immutable ledger. This, to me, represents a huge upgrade on our accounting system that we've got. And once people understand this, all of a sudden, people are going to want to denominate in unit of account, and the game is going to, the unit of account in Bitcoin. And people are going to change the game from thinking in a fiat mindset, which is profit and loss, to being on the other side of the balance sheet. A win in economic terms in a hyper Bitcoinized world is, do I have more Bitcoin than I had this time last year? So all of a sudden, it makes the economic decisions much simpler, because all you need to think about is, do I have more Bitcoin or less Bitcoin after this transaction? And then it obviously has downstream effects on really sharpening your focus for how you want to spend your Bitcoin. But the unit of account and market is interesting because it's something novel that we've never seen before. And a joke I like to talk to clients about is, how do you know you've got a good accountant? If they're any good, they're going to look over their shoulder, they'll close the blind, and then they'll whisper to you softly, what would you like it to be? So you just ask them, what's 1 + 1? And they'll tell you whatever you want it to be. And this is the magic of numbers. And this is the beauty of, good accountants. They can draft outcomes that they want to. But with an immutable ledger, it's very difficult to do that and draft those outcomes. So that's the setup of the technologies, and sort of stage 4 of that valuation framework is that we have a technological innovation that is going to put Bitcoin as the dominant form of store of value, medium of exchange, and unit of account. So if you look at those markets combined, it's somewhere between store of value might be gold at 10 trillion, medium of exchange might be 100 trillion in US dollars, and the unit of account market I've got pegged at closer to 2,000 trillion with derivatives, but some people say, no, the total addressable market's only 900 trillion. The numbers are irrelevant. It's really just a thought experiment to see, okay, does this logic check out? So what we have now is, when we have, and this is the first time in history, we've seen one dominant asset that is the best at store of value, medium of exchange, and unit of account all at the same time. So we now have the first triple point asset. Never before in history has this happened. And we're looking at this thinking, oh, well, that's exciting. And some Bitcoiners think about, how to value this. If it's the best at all of those three things at once, maybe you should just add up, add the store of value of 10 trillion plus the medium of exchange of 100 trillion plus the unit of account of 1,000 trillion or 2,000 trillion. Add those up, divide it by 21 million. I know that's simplistic and there's a lot more nuance to it, but $2.1 quadrillion divided by your 21 million and you get to $100 million a coin. That all sounds good until you start applying some economic rigor and reality to how the real world works. And Where the numbers get really quite unbelievable and fanciful, and I don't want to walk away from that. I just want to sort of discuss the ideas and the concepts in it. The numbers that everyone gets on the back end of it is up for them. But what from an economic perspective happens, I believe, is rather than you add those store of value plus medium of exchange plus unit of account together, that's the wrong way of thinking about it economically, because you are going to have competitive tension between each of those use cases. So it's not a matter of a linear accretion of value by adding those three together. It's an exponential. You need to multiply those together because you have store of value competing with medium of exchange, competing with unit of account for very rare space on the blockchain. So all of a sudden, you are going to have a competition, and this is the unbelievable thing to think about, is that there are at least 8 billion souls on Earth that Bitcoin serves a purpose for. Now, 8 billion people don't understand yet that that serves a purpose for them, but there is going to be demand from 8 billion people at some point in time in the future. So all of a sudden, we're going to have economic tension amongst 8 billion people trying to vie for that one single asset. And this is where all of a sudden the numbers get extremely big very, very quickly that we can't comprehend. But that's because, as Jeff Booth says, we're in an existing system that we can't envisage what the future system looks like, because you can't value the new system from the existing.
I like what you outlined there. Maybe a tad bearish, but I think we're going to kind of unlock some of this even further. So you bring up this interesting vector where it's exponential, not linear, between these three ideas of store of value, MOE, and unit of account. And I want to think a lot more about unit of account. I think, we've explored store of value and MOE a lot, but with unit of account, we get what's competing with these other vectors. But all these vectors unleash, I think, energy or potential or production in humanity, kind of like what you're saying, through the alignment of 8 billion people. And even that number is going up and to the right, generally speaking. People can argue about that and whether it should go up and should not, and the Malthusians and all that nonsense. But generally speaking, it's going up and to the right very fast. And I think that unit of account, though, just unlocks so many things that aren't really thought about. Just in terms of global trade, we can not only now trade with anyone through the world through this censorship resistant network, and that unleashes synergy, but we can make economic calculations with one ledger, and we can trade between nations with one ledger, which reduces risk and reduces complexity. Just think about the foreign exchange market and hedging and just all the balance sheet management. That's all for naught, really, because we're using competing and varying indexes and ledgers for money. I'd love to hear maybe some more of your thoughts on unit of account and technology, and maybe what else that unleashes.
I'm really hopeful for humanity on the fact that human ingenuity works best when there are constraints. And we have a constraint of absolute digital scarcity of 21 million here. So this is going to lock a whole host of innovation from an unlocking of human potential, I believe. And what's really interesting is that when you have the ledger system that we've got within Bitcoin and the unit of account, everything needs to be contained in that 21 million. So that needs to account for both the debits and credits in a financial or accounting system, which is very funny. And this is where the value of Bitcoin can go exponential really quickly, when the unit of account basically has debt issued on it. Now, there's no way of accounting for debt on the Bitcoin ledger, but there's an abstraction layer above that we can put an accounting layer onto. And this is where a lot of people, I think Knut does a wonderful job of explaining everything divided by 21 million. And everyone not everyone, I look at that and I think that's the most genius meme I've ever seen. I'm like, it's exquisitely simple in its memery, but it's a perfect encapsulation of what happens, because it encapsulates all of economic prosperity into the future, and it captures that on the chain today. So this is what becomes very powerful from and incentives. And to your point earlier about it's so critical to make sure that there's no SAT leakage now, because you can set up generations into the future. Because as more and more economic account goes into the Bitcoin blockchain, and the unit of account gets stored more and more so in Bitcoin, you own a percentage of that network now that can never be diluted. And that is exceptionally powerful. And this is something that I don't think we really comprehend, the power of exponentials or compounding. And, to Einstein, it's the eighth wonder of the world. Well, it really is, because it's unbelievable in its simplicity, yet our linear minds have huge trouble understanding exponentials. And to put this in terms that maybe all of our listeners may or may not have heard, and I heard this from Joe Burnett, a previous guest of yours. In the 1800s, there was X amount of gold that was in existence in the world. And what's interesting, fast forward 220 years later, we produce more gold this year than was in existence in the year 1800. And gold's only got a 2% inflation rate. So what happens with that is that, it gets exponentially bigger. But that doesn't happen with Bitcoin, because there are hard constraints on this unit of account ledger. And thinking about this ledger, which I think is mind-blowing from a more a societal perspective, is that, this represents a new phase for humanity, in that we have had, this is our third phase that I think we're entering. We are entering, the three phases being, we had pre-written word, where we were basically cavemen running around chasing animals, stabbing them and killing them. We then evolved to the written word, which I think in the earliest abstractions, you can look at cave paintings that depicted drawings of animals and men standing around it. That was probably a plan for a hunt, not anything more than that. But we look at it as art, and it's like, I don't think it's art. I think it's, okay, here's an animal. Here's where you're going to stand. Here's where I'm going to stand. And you stand over there. And this is how we get it. That's dinner. Now, that written word has evolved to some sophistication in the forming of recordings and things like that we are now. But it's really a written word. It's not a recording, because it's all subjective and can be changed at a whim. To my point earlier about how do you know if you've got a good accountant? It's whatever you want it to be. It's choose your own adventure. And this represents, the immutable ledger on the unit of account represents the third stage in humanity, is that we now have recorded history of an immutable ledger. There is no way of changing history now, looking back, which I think must be a terrifying thought for some governments, because holy shit, there is a record of everything we're going to do moving forward, which is, all of a sudden brings a hardness and a new level of accountability, that their actions are going to be monitored into the future. And this is something I talk about and think about with my brother a lot, that our great grandchildren are going to be watching how we manage our Bitcoin wallets, thinking, you've got a Bitcoin podcast and deliver great content, understand Bitcoin better than anyone on earth. I'm here talking about Bitcoin, hoping to, aspiring to know that much. And my great-grandkids can basically look at how I have behaved with that Bitcoin. Was I a good custodian of that Bitcoin? Did I look after it and appreciate it? Did I value it? And then you see people who just go to the dark side and start shitcoining and trading for more Bitcoin. And you just think about the legacy that you're leaving, and like, what sort of example do you want to set for everyone else? So all of a sudden, there are some clearly defined rules that are going to change personal behaviors. And I think in that, it's going to change societal behaviors on a greater level, because there is far more responsibility when you have everything recorded, and that you have to account for that at some point in time in the future.
Yeah, that's wild. I wonder when technology will evolve, though, so that more transactions are obscured as more people move to the network and just can kind of make their lives on the network more obscure from a medium exchange perspective, and not be recorded for eternity in history, whether it's through coin joins or washing coins or transactions, just to obfuscate things. That'd be interesting, how vastly public and transparent people's behavior on the network will be for years to come, and maybe even centuries. in good and bad ways.
True.
And
There's
I want to jump back to the dollar and synergy here and then working together. And it's because it's an interesting point. But I wonder when would Bitcoin price or SAT price reach equilibrium? As long as I don't think Bitcoin can reach equilibrium as long as the dollar exists. And I think there are still ways you can use Bitcoin as a unit account, no matter how much Bitcoin price is rising up. And I would say I know there's a terrible bear market, but I think Bitcoin has always been in a bull market. If you look at it, on a logarithmic chart, it's still up and to the right, and it's crazy. And I think if you zoom out over another 14 years, another 28 years, another 142 years, you'll see how it's very exponential now. But when do you think it kind of reaches equilibrium, or how do you feel about sort of that synergy with the dollar and that impact on Bitcoin's dollar price, even though we know one Bitcoin is one Bitcoin?
Yeah, and that's a big question. When do we get to dollar sat parity? And that would represent close to 100 million, $10 million a coin, is it? Or $1 million? Just trying to think.
Oh, I meant 10 million a coin.
Dollar sat parity is 100 million a coin because there's 100 million Satoshis? Or
Right,
would it be
now
dollar
you're getting
cent
me.
parity?
Well, so dollar
Sorry,
cent parity is at $1 million.
cent sat parity.
And yeah, cent sat parity is at $1 million. And I think a lot about that since my conversation with Jimbo, because he hypothesizes that at $1 million per Bitcoin, you log onto your exchange, and they're not going to put up 1 million per Bitcoin. They're going to put up 1 cent per sat. And all of a sudden, in a lot more people's minds, exponentially, it's going to be a shit coin. And you could buy a sat for a penny. And why wouldn't you pay 2 cents for a sat? When you start thinking about, the million of Bitcoin, well, that's a lot of money, but I'd pay 2 cents a sat. It could double overnight. And so I guess $100 million dollars for Bitcoin would be $1 a Bitcoin, $1 a sat.
Yeah. So I look at this and I think this can happen a lot quicker than we think. And that unit bias that you talk of, I think is a huge thing inhibiting Bitcoin, and it's a huge positive for a lot of the altcoin markets. This is where, I spend a lot of my time thinking about, obviously risk mitigation and trying to talk of the fact that I firmly believe that we've got more upside in front of us than we do behind us with Bitcoin from a valuation perspective. And I'm not sure if you've seen Wicked Smart's chart where it sort of the parabola starts flattening out where we are now, and then it eventually goes vertical. And I think that's fundamentally what's going to happen with that. And that I think whether we like it or not, layer twos I think are going to have more and more stable coins attached to it, and I think there's going to be credit markets on top of the Bitcoin base layer. And this is where having functioning credit markets along with excuse me, the use of a stable coin is going to grow the US dollar hegemony. It's not going to shrink it. It's going to grow it further. And it's going to be the dominant global currency. And until the rest of the world basically gives up and says, no, we only want to be paid in Bitcoin, the US dollar is effectively going to infiltrate every country and become the dominant form of currency within each country. Now, we've had a great alliance being in Australia with the US, and I think that's a distinct possibility of happening down here because it will be the most stable form of currency and most widely accepted. And global trade will be able to be facilitated across nation states at across anyone with using a single currency. And one of the big things that I think I didn't touch on earlier, which I think is an enormous benefit to Bitcoin, is that Bitcoin solves duration risk, which is a big problem that we've got in global trade right now. And what does the duration risk look like? Well, it looks like an exchange rate risk, inflation rate, and interest rate. You roll those three things up, you basically get duration risk. And this is where I think Bitcoin offers a unique ability to solve duration risk. And what I think is going to be a complete game changer from a societal perspective, which doesn't really get much love, but it's starting to get more attention now, is the ability to time lock your Bitcoin into the future, or have a micro transaction time locked on a financial contract, will be the unlock for society of solving duration risk when Bitcoin becomes the preferred mean of exchange in accounts. And this is where I think there's an opportunity coming up very soon for a lot of the oil and gas producing states that we now see that they're starting to talk about Bitcoin mining and, the use of flare gas to power their miners. All of a sudden, this is effectively the gateway drug for these nation states, oil and gas producers, to see that Bitcoin is the real deal. It can help them monetize a stranded asset that they never had the ability to do. And then once they've seen how this thing works, it's not a huge leap to think that these nation states can turn around and say, hey, we want our payment of energy denominated in Bitcoin. And what's wild to think about this, there's roughly $10 billion worth of global trade per day, give or take 20 or 30% fluctuating on the oil price, but there's 100 million barrels of oil a day traded. And what happens at $100 a barrel? That's $10 billion a day. What happens when those states turn around and say, you know what, we don't want the money that you can print for nothing. We want the money that you have to do something to produce, which is Bitcoin. Now, to put this in terms that we probably all understand, if those nation states do that, we effectively have 2.5 Michael Saylors worth of demand entering the market every single day. What does that do to price? And this is the logical conclusion you reach when you understand that Bitcoin is the best form of money ever invented. Once you understand that and deeply, resonate with that, you won't want to take anything but Bitcoin as payment for what you do. And these nation states will turn around and say, look, we're doing Bitcoin now, so pay us in Bitcoin. And probably the most simple leap I can make to get people's head around that thought is, if you in the US were offered, 1,000 bolivar by someone, Venezuelan bolivar, to buy a beer or do whatever you're doing, you'd turn around and tell them to piss off. You don't want that piece of paper. It's not worth, you wouldn't wipe your bum with it. But if they said, hey, we'll give you Bitcoin, which is a better form of money than the US dollar, oh, okay, well, I'll take that. Sure thing. So it represents some wild possibilities for things to change quicker than we know. And in the bottom of a bear market, things seem very bleak, but things change very, very quickly. And it only takes, click of a finger to really change direction, particularly with an asset so small relative to everything else.
And you mentioned time lock, so I want to get into that a little bit. Before I ask you to kind of define that, you brought up barrels a day. I don't know if you mentioned like 100 million barrels a day are produced. And I can't wait until people start thinking about how many Bitcoin a day or sats per day are produced by each nation. And I mean, you see nations with the BRICS countries trying to figure out how to operate outside the dollar network, which is pure extortion and gangsterism. And they're trying to figure out, by the network and they're trying to figure out how to operate around it. But I think of slave beads. I'm not taking your money. I don't know how much you're printing of it and how easy it is for you to produce your money. And you're going to have the same concerns for me. But I'd love to hear more about time locking. Like, can we define that a little bit? Because I think it's a little bit of a newer idea in the network that's not fully understood what it is and how it can be used even.
Sure thing. This is one of my favorite topics to talk about. I'm not a tech guy, but I see that there is going to be some huge implications for finance, for estate planning, for legal, for our judicial system, a whole host of implications on a broader societal perspective that time locking is going to bring in. So what is time locking? Well, time locking, and when it relates to Bitcoin, is the ability to lock your Bitcoin in time to a certain block height or date in the future. And what this means is that I can be sitting here in the year, what is it? It's the 7th of September, 2023. I can, with my Bitcoin wallet today, I can literally send a Bitcoin into the future, 3 years into the future, or call it 10 years into the future. And what that means is if I time lock it, although I've got, what I do is I send it from this day to 10 days into the future. And what happens is I throw it out of this wallet and it's sitting in this position, not in my wallet here, waiting to land in this wallet in the future. But this wallet in the future doesn't open up to accept that Bitcoin until 10 years in the future. So it's just like having a safe at home. If you've got a time lock on it, you might have a 24-hour time lock. So if someone busts down your door and says, give me all your things from your safe, it's like, no worries, I'll unlock it, but we've got to sit here for 24 or 48 hours to wait for that safe to unlock. In the very same way, you can send a transaction to the future and for a specified period of time that you determine, and it won't unlock until you get there. Now, that I think is a wild concept that is completely undervalued from a broader perspective. And it's and just on that time lock, even if you have the private keys, once you've time locked that Bitcoin, you can't get that Bitcoin back until it hits that block height. Now, there are two types of time lock. There's a time lock you can unwind it with the object verify, I think it is. And then there's BIP 65, which basically says once it's sent under those conditions, until that block height is reached, you can't get your Bitcoin back. So if you've sent it 100 years into the future, you've got a task to do to basically make sure that all of your lineage to follow has the private key to that wallet in the future. And I have an example of this that my brother sent basically half a Bitcoin to the year 2144. So 120 plus years in the future. Why did he do that? Well, he wanted to solve the block reward problem. So he sent half a Bitcoin 4 years after the last block reward was to be paid. And so this is, his way of solving the block reward problem in the year 2144 is to send half a Bitcoin from today that's worth relatively nothing to the year 2144 to solve that issue of the block reward. So no one can take that Bitcoin out of that wallet because it doesn't exist in today's wallet, and it won't exist or in a wallet until the year 2144, which is a wild concept. Now, how does that relate to what we're doing today? Well, there's a whole host of applications that we can use for this. One of the things that come to mind from an immediacy perspective is you can use time locking as a way to secure your Bitcoin in a far deeper cold storage than anything else available. And one of the conversations I had with Knut is talking about Bitcoin being element zero. And I talked to him about cold storage, and he said, oh my goodness, Peter, I love this. It's element zero at absolute zero. So the coldest temperature in the universe is basically a time-locked Bitcoin. Now, thinking about this from a security perspective, what's really interesting is because it's not in this wallet and it's not in that wallet, what's really interesting is that when it's in a suspended state between the two wallets, if SHA-256 was broken tomorrow and you could wipe Satoshi's wallet, or you could steal Satoshi's coins, you could steal the Coinbase wallet, what's ironic is that Bitcoin that you time locked in that superposition between the two wallets and times wouldn't be able to be stolen. A wild concept, right? Because it's not in a wallet. And the block height to steal it doesn't exist yet. So it has some huge security implications for our Bitcoin. And I think it further strengthens the ability to have seizure resistant and censorship resistant Bitcoin.
I mean, the implications are beyond surreal. I'm trying to really think about, get my head around what your brother did. So I have to ask the question. I mean, when did he send the half a Bitcoin, and how much US dollars was that Bitcoin worth at that time? And the reason I ask that question is because when this Bitcoin reaches its future destination 4 years after the last halving, I mean, the world's going to be fighting over one new sat, a block, or one new sat, a halving at that point. I don't even know what the numbers are. They're infinitesimal. They're tiny. And whether, it costs a lot of money in today's dollars or not, in the future, that will look like, wow, this now defunct money was once traded for imminent value. And the amount of value that's going to be unleashed, not unleashed meaning created at that time, but like unlocked, will to whatever generation receives it. And I don't know how your brother's securing this. Is just almost like an infinite amount of money at the time it's unopened to the other people in society.
Correct.
And it just speaks a lot to, I guess, what you can do with like sort of the last will and testament, or trying to move your money forward in time without any leakage, while accruing probably a tremendous amount of purchasing power for
And
future generations.
this is exactly to that point. All of a sudden, this completely changes things because you have no leakage. There's no leakage of sats. And the only thing is, it's like a reverse leakage. As time goes on, it sucks up more and more economic power or energy, and more economic energy revolves around Bitcoin. So it's actually reverse leakage in fiat terms, but it's stability in Bitcoin terms. So my brother did that about 2 years ago. He wrote an article called Bitcoin is Time Traveling Energy, which you may like to put in the show notes for anyone interested. He also, in that article, he put in the private key for that wallet in the future. So if anyone can break the time lock, there's a Bitcoin sitting in that wallet. So that's how serious those time locks are. There's a literally a published article with a private key in it, and if you can break the time lock, there's nearly a full Bitcoin sitting in there, because not only did he do half a Bitcoin in 2144, he did 0.25 4 years after that, 0.125 4 years after that, and it was just a way of solving for the block reward problem, because obviously we all want to see things, see Bitcoin succeed.
So if no one breaks the time lock, is this just going to be some sort of competition to enter the private key as fast as possible at these intersections of time?
Correct, but this will be won by the miners because they find the nonce first and then they rehash it, right? So it's really a way of incentivizing the miners.
That's how
to
it solves
keep
the
mining.
block reward. I was trying to figure that out.
Yep. So in real terms, what that 500,000, those 50 million satoshis look like in the year 2144, that's the equivalent of just under 1,000 years worth of block rewards at that point in time. Now, to put this into perspective, a year's worth of block rewards today is about $7 billion. So in using some very simple maths, if we fast forward to the year 2144, I'd assume that the block reward isn't going down in US dollar terms until that point in time. So he sent through the equivalent of $7 trillion worth of value to that point in time for humanity and for the miners to incentivize them to keep mining.
Wow. Tremendous. I want to detour a bit. I mean, we could talk more about that as it comes up, but I want to talk a little bit about maybe banking and how are functioning credit markets on Bitcoin going to change things?
Firstly, I think it leads to much broader adoption. There are many sort of facets to credit, which I think Bitcoin can change fundamentally. The first is collateral. Obviously, all credit markets are based on collateral, and this is where Bitcoin is the greatest form of collateral ever invented. When you look at credit, one of the three C's, well, the three C's of lending or credit is basically collateral, capacity, and character are fundamentally the three things you look at. So you look at capacity. Do they have the ability to repay the loan based on their income? Do they have the character that if they did have the money, would they actually pay back the loan? And then the final thing is, we're lending them a certain amount of money. Do we have a sufficient buffer in the event that they don't pay the loan? We can take that asset, sell it, and recover what we lent them. So when you look at the basis of lending, that's the fundamental three C's of lending. What's really interesting about Bitcoin is that because it's a bearer instrument that trades 24/7, and this is the first instrument that's really traded 24/7. Even Forex never traded 24/7. It had 36 hours a week off between, Friday night to mid Sunday in the US or late Sunday in the US before the Japanese markets open. But this trades 24/7, 365. All of a sudden, because of that ability and that collateral, the fact that it's so pristine and it trades in that way, you no longer need to require or look at character or capacity for lending. If you've got the Bitcoin, it's as good as done. You now have no requirement to do a valuation on the asset because it's mark to market every second of the day. you don't need to do a check on whether or not there's a lien or a mortgage against the property, because if it's in your wallet, you know it. There's nothing against it. So all of a sudden it completely redefines lending. And this is where I look at this and I think understanding lending markets and credit being, you know, basically what makes the world function. And to put this in terms that maybe not everyone understands, but you know, everyone thinks that equities rule the world, and that's sort of the sexy side of investment banking that everyone looks at and thinks, oh wow, I want to be in equities and I want to be a stockbroker and the rest of it. That's basically all wank. The real value is created in the debt markets relative to the equity markets. And you look at all of the leaders, the CEOs of the major banks in the world, they've typically had a debt background, not an equities background, because that's where all the money's made, in the debt markets. So they're much bigger, they're much more liquid than the equity markets. And this is where Bitcoin has the ability to explode the debt markets in an upward revision of the numbers. So I think before Bitcoin destroys the credit markets, it's actually going to lead to its salvation, because all of a sudden you've got a collateral that can hold an infinite amount of value. And then that is going to allow you to effectively increase the credit markets dramatically, increase asset values, increase collateral values, and it's going to have some profound impacts on broader society.
Yeah, I'm trying to think through that. So do you think will banks pay you to hold your Bitcoin in the future?
I personally think they will, yes.
So maybe why would they pay me to hold my Bitcoin?
I think they'll, better than that, I think they'll pay you to borrow money from them.
Tell me more.
So this is where how we're positioning clients and thinking about this long term is that we want to have our clients in the best form of structures that are going to enable these sorts of opportunities. And in very simple terms, I believe that the banks are going to pay us to borrow money from them. Now, this seems completely counterintuitive. It sounds like it breaks the laws of physics when it comes to finance, because how is that possible? And I agree with all of those thoughts and sentiment. However, let me put this in a context. Let's just say we fast forward 10 years into the future. I might take a step back. Under Basel III Accord, which happened just after the GFC, when the whole world nearly blew up, the Basel were a global set of standards that most banks from around the world basically adhered to. They joined it. They said, we're going to do this. Now, what was that about? The fundamental driver for that was talking about ensuring that the banks had sufficient liquidity or capital adequacy ratios that ensured that if they were lending money out and rehypothecating money, that they had sufficient cash reserves to make sure that they didn't blow up. Now, what's interesting about this is that in Australia, and I think it's the US as well, although I actually think the US has abandoned these standards of, required capital for lending ratios. I think it's just totally out the window now, but there was a time when the world adhered to it. And what that looked like is if you borrowed $1 million from the bank had to have $50,000 of cash sitting on the balance sheet. Now that can be in a client's account or whatever, but you basically had 50,000 in the account. That meant the bank could take that and lend that 20x out. So that's how rehypothecation works in the banks, and that's what the Basel III Accord said. You can 20x your cash on balance sheet. Now, here's where, and this is, sorry, a long answer this, but it's kind of complicated, but this is where the competing thoughts around, you've got Bekele on the left who calls it a currency, and you've got Saylor on the right who calls it a property. Who's going to win this battle? I think because of Bitcoin's unique properties, no one has to win the battle. It's going to be whatever you want it to be. Now, if you choose for it to be property, you're going to basically put your Bitcoin you're going to give the bank your Bitcoin as property. They're going to take a lien against it, and they're going to charge you probably 12 or 14% like Unchained Capital charges to lend you money. But if you say it's a currency and you put, say, 10 years in the future, it's 10 million bucks a coin, you give them a coin, it sits on their balance sheet. That now is currency that they can lend out 20x on. And so with that $10 million Bitcoin, they're lending out $200 million in loans across the board that they wouldn't be able to make unless they had your Bitcoin. So they might turn around and say, hey, I'm going to do a 10% LVR on my Bitcoin, and I'm going to borrow $1 million on that $10 million Bitcoin. And they'll say, great, we'll pay you 5% per annum to borrow from us, because that gives them the collateral that they need to then go out and make more loans. And this is where Bitcoin is going to be just a black hole of value swallowed up in the collateral sense, because the banks are going to be making $4 million because they're making $4 million a year because they've got an interest spread of probably 2% on that money they're loaning out. And so they can afford to pay you, 5% or 10% on that $1 million that you borrow. So it completely redefines things. And this is where credit markets are going to change enormously once the banks understand what Bitcoin is.
Right. Yeah, that's another fascinating point. So then how do you think Bitcoin with time locking out into the future while bringing fiat into the system supercharges the banking system? Is that kind of what you're going over there, where it just kind of gives them incredible power to lend out more money?
Yes, it does. And the time locking, I think, is probably a slightly different function in that, in this capacity. On the lending function, I don't think it's going to really be used, say, in day-to-day lending and credit creation in that capacity. But I think time locking, when you apply that to the issuance of bonds, particularly government bonds or corporate bonds, in the future, like I look at bonds now, and we haven't, invested in bonds in a long time. Although at the moment, short-term bonds look really good. So I'll just make that caveat. Long-term bonds, another question. But short-term overnight looks really good. Great place to get 5% risk-free. But it's going to become harder and harder once it becomes very clear to people that there is a vicious cycle, of effectively hyperinflation happening, or inflation is becoming a bigger problem, and that this money is increasingly becoming worth less and less, that they're going to want to have some provision of that bond issuance tied up in the form of capital guaranteed. And what Bitcoin can do with a time lock is that you may be able to solve that security issue for new purchases of these bonds by securing, say, 2% of the bond issuance with Bitcoin in a time lock fashion that expires on the completion of the contract. So on the completion of the bond. So you could have a 30-year bond with 2% of that total value of the bond tied up in a time lock Bitcoin that basically takes a whole host of Bitcoin off the market, and it gives the purchaser of those bonds an enormous peace of mind to know that they've got 2% Bitcoin locked in a contract for 30 years that can't be moved, because the time locking is an immovable rock, just as it's an immutable ledger, Bitcoin. This time lock is a function that can't be changed. So it has the ability to take a huge amount of capital in that. And this is where, from a size of market perspective, there's $60 trillion worth of bonds globally that are basically refinanced or issued every year. So if we were to have 2% of that market apply to Bitcoin purchasing, there'd be $1.2 trillion worth of Bitcoin purchases per annum. So it'd be, the equivalent of 300 Michael Saylors entering the market every year.
Man, wow. That's something to think about. So then, well, when we talk about time locking, though, and we use these great numbers of pushing Bitcoin out into the future via that mechanism, what do you think has a greater chance of living longer, the internet or Bitcoin?
Oof, a symbiotic relationship, which can't happen without the other. But I think clearly the internet has to outlive it. But I think the reason why it will continue to survive and thrive is because of Bitcoin. So Bitcoin will become the dominant network on the internet and will actually supersede its importance. But of course, Bitcoin can't function without the internet. So it'll be like for want of a better term, it'll be like a parasite that grows into the main organism and then will actually provide sustenance and life to the internet. So I think it's quite a symbiotic relationship that they'll both benefit from each other.
And How do you think, how does Bitcoin lead to an event horizon in finance and a singularity in economics if Bitcoin goes up forever in price?
Oh, that's an exquisite question, Cedric. Oh, I love that question because this is such a huge thing to think about. When you couple time locking with Bitcoin and overlay our traditional financial markets, what I think the economic event horizon is that once Bitcoin becomes ubiquitous and people understand that literally it is, well, I say this, touch wood, I'm not a techie, but I believe Bitcoin will be understood to be unstoppable. You won't be able to change it. It will continue to go forever. Once that is a widely held concept, it will effectively be the event horizon in economics that, on from a duration perspective, the longer a duration, an asset duration is, the higher the risk because you've got more time involved in that. Now, enter Bitcoin. What I think will happen is, and sorry, in that traditional sense, although this isn't happening now, it should happen in normal times. But the longer a bond issuance is, the higher the interest rate should be because you've got more risk because you've got more time. So risk is a function of time. So shorter dated bonds should typically have a lower interest rate because they're only a fraction of time. So there's no risk to it or much lower risk. So unfortunately, that's inverted at the moment. That's another topic. So the longer the risk, the higher the reward should be for holding that longer term duration. Now, what I think Bitcoin represents is the ability to use time locking as the interest payment on long-term contracts. And if you time lock a really long period of time, you might actually have a lower amount time locked than a very short period of time, which seems completely counterintuitive. It literally flips finance on its head. To your point before about how do I get paid to borrow money from the bank? It's like, this is what Bitcoin does. It totally inverts our whole field of thinking. And if Bitcoin makes the world better, then you should be rewarded less for holding that longer. And it's a very strange economic concept to think about, but no one would take it because they want the short duration with the higher bit now. So it's just I guess, a great thought experiment to think if evolution is getting, if we are getting better with time, then we should be paid less at a future point in time than more.
Yeah, I always think about that a lot. Like just in simple terms, both my parents were teachers, and a new teacher today makes more than they made at the height of their career when they retired 25, 30 years ago. And the new teacher today has no experience and, way less ability, yet we're paying more. And you just think that in terms of manufacturing, how much is rubber going to cost me next year? It's going to cost you a little bit more, Sal. Why? Well, it's going up in price. Inflate. Well, is it better rubber? Does it last more in the process? What am I getting for it? I want to move on to how is investing in Bitcoin the fastest way to ascend Maslow's needs hierarchy?
Wow. Well, so Maslow's needs hierarchy is basically a human hierarchy of needs, what you need in order to fulfill yourself, nourish yourself, and then effectively what they term self-actualize or live your best life. At the base layer of that Maslow's needs hierarchy is basically food and shelter. And then a layer up on that, you've got, community. A layer up on that is love. And then at the very tip of that, top of the Maslow's needs hierarchy, which looks like a pyramid, you've got self-actualizing, where you feel like you're doing God's work for the day. For me personally, I haven't seen an investment or anything out there that enables people to put a significant amount of their assets, time, or capital into an asset like Bitcoin, and then just sit on that and wait. Because what happens over time when investing in Bitcoin is that it allows you to scale up those layer of needs quicker than any other way I've seen possible. So it really is a complete game changer, and it's counterintuitive from an investment perspective, because all you need to do is buy and hold and secure your Bitcoin over a period of time. And just by, patience and holding that asset, you naturally ascend and create longer term time horizons in your thinking. And that ultimately helps you ascend that Maslow's needs hierarchy.
And I guess that's kind of in line with aligning 8 billion people's human interests for the first time in history.
Yeah.
So, as people become more aligned to this, I mean, do you think there'll be a point when there's no Bitcoin on exchanges?
I hope
Is that
so.
in 2028 or 2020,
Uh,
2032? And what kind of implications does that have for Bitcoin? Does that mean people are working for Bitcoin only? Does that mean or trade, I guess, obviously? What does that mean that it's not on exchanges?
uh, I think there's a very high probability that there will be very low volumes on exchange, and this is where I hope we get to a world. I don't think exchanges, go away anytime soon, but I think, and what was exciting in the last epoch was watching, Bitcoin roughly move from 3 million Bitcoin on exchange down to roughly 2 million. I'm like, that's really, really exciting to me, because I'm like, oh my goodness, wow. The actual supply demand curve is actually showing what I think it should, which is there should be a gradual, if not a really precipitous fall off exchanges, which basically people are removing their coins. And that is going to force upward pressure on price to anyone entering the market if they want to buy coins. Now, that hasn't really played out in this bear market, and I'm really curious to see, once the financial chicanery goes away, what that's going to do to price. And I firmly believe that we're going to have less and less coins on exchange, because if people really understood what this asset was and they really valued it the way it should be valued, it wasn't given an arbitrary fiat value on top of, say a US dollar price, there's no way on earth you'd entrust your Bitcoin to be left on an exchange. It's crazy to think that people do that. And this is where we've seen in the last, say, 18 months, we've seen FTX blow up. We've seen Three Arrows Capital blow up, Luna blow up. Take your pick. There's a Genesis blow up, BlockFi, Celsius. I'm thinking, how many more lessons do these people need to learn to understand that it's critical to self custody your coins? It's sadly, because there's so many new people to Bitcoin every year. This is a lesson that's probably going to keep happening for the next 10 to 15 years at least, before people really get the message that it is not good for your health to leave your Bitcoin on exchange.
Right. And, as we maybe transition to a Bitcoin standard in the future, could we find ourselves in a situation where a large amount of Bitcoins are not available for sale? I mean, how would $9 trillion of global trade daily occur when there's only, now there's 900 Bitcoins a day minted? I mean, we know what happens in 2024 in spring, that gets cut in half.
Yep.
I mean,
this
what
is where
kind
I
of,
think we go to. I think we get there. I don't think there's going to be Bitcoin on exchange. I think you're going to have to trade value for it at some point in time in the future. And the crazy thing is, to think about this, we've got, what is it? Roughly, I think 6.3 trillion of global trade, and we've got 900 Bitcoin minted today. I know a whole host of people who will not accept anything other than Bitcoin for their time or services. And hats off to them. If I want their services, I'm going to have to pay them in Bitcoin. Now, what happens when the rest of the world wakes up to the fact that, you as a US citizen are not going to accept a Venezuelan bolivar? That's effectively what we're saying with Bitcoin. When people figure it out, they're only going to want to accept that. And now we've got 4 million lost. We've got 15 million in cold storage. We've got 3 million or 2 million on exchange, and that's running out pretty quickly. We've got an ETF, which is going to store a whole host of them in the very near future. And, the thought of thinking that, the daily global trade is going to be facilitated by whatever the amount of Bitcoin is minted on the day is not a far-fetched concept when you think about the fact that you're going to have a functioning credit market on Bitcoin, and you're going to have a stable coin. Then the logical conclusion I reach is, and it sounds so fanciful, but my expectation is whatever global trade is on the day is going to have to be facilitated by whatever is minted on the day. And so really rough numbers on that, 6.3 trillion in global trade divided by 900 Bitcoin. That gets you to a $7 billion Bitcoin. And guess what? In April next year, it doubles from 7 billion to 14 billion because you've got 450 Bitcoin on the day. And this is where, I think you and I probably appreciate that and have a chuckle to ourselves. But logically, you play this out and think, well, if people understood Bitcoin how we understood it, that kind of feels like a logical way to think about it because, there's no way on earth in Australia I'm accepting a Venezuelan bolivar. There's no way you're accepting it. And when people understand that the currencies we're using today are the equivalent of that, then, it's a very real possibility that that happens.
And yeah, I mean, it's just thinking about those numbers. It's kind of astounding, but I think it's coming quick. But kind of being a professional financial advisor, what do you kind of say to people, or how do you think about, right now, all markets seem to move on the decision of U.S. Federal Reserve.
That is 100% true.
And so that kind of makes it feel like Bitcoin's not doing much in that regard. And that's not the argument I'm making because it's doing a lot and it's rising exponentially in value. But kind of how do you frame that up? Like, and it's also interesting speaking to lifelong investors, advisors. I'm not going to call you a trader, but someone who looks at a lot of different assets. And I appreciate a sense of absolutism or being agnostic where, hey, bonds are kicking off 5%. Though that makes sense right now, or I can see how that's attractive. So, how do you think about everything moving with the Fed and how to respond or react? How to not get maybe short-term minded, or how to think short-term minded, or how to keep a long-term perspective?
I think it's very difficult. You are correct, 100%. The entire financial world revolves around the Fed and what they're doing with respect to interest rates and how much money they're issuing. And over the last, say, 2 to 3 years, it's been very difficult to craft long-term investment outcomes for clients because you've had such fluctuations in the market. You've had the Federal Reserve, you've had in November 21, you had 2 Federal Reserve board members resign for insider trading. You've had Jerome Powell telling us that this inflation's transitory. They've printed money out the wazoo thinking that that wouldn't affect it. It's like, please. In addition to that, you've had numbers that have just been stifled and basically made up. And these are numbers that I'm talking about are from the Federal Reserve, the Philly Fed, which is a sub-branch of the Federal Reserve. In December last year, they basically had to reissue a statement that said we missed 1.1 million unemployed people in the month of June. They just missed it. Sorry, my bad. We'll tell you 6 months after the fact. And it's these are the people who are responsible for effectively creating and crafting outcomes in markets. And we have to rely on these people who are so useless they can't even tell us, they missed 1.1 million people unemployed. Now, I get it, the fact that it's an election year, a midterm year in the US, so it's obviously that's got a huge amount of gravitas or weighing on those political outcomes. But I mean, come on, the rest of the world is making financial decisions based on the information you're providing. So I find it very tough to make these investment decisions with clients for any meaningful amount of time because we're relying on numbers that are so rubbery. And this sounds awful to make the comparison, but we used to joke about the numbers coming out of China and thought they were just, made up numbers, like you couldn't trust the numbers. But sadly, and this is, not just the US, but it feels like every country is just making up the numbers right now. And back to that joke about, what do you want it to be? It's whatever the politicians want the numbers to be from the financial side of things. It's like, these numbers aren't matching up with my reality that I'm looking with, with my lying eyes. It doesn't make sense. So it's very difficult. And we're in a weird position where it's very tough to invest in property right now because you've got interest rates that are exceptionally high. You haven't had rental yields increase dramatically to keep up with that cost of capital. So what you've got is you've got this, either property prices need to come down dramatically or interest rates need to come down dramatically to fill that void and make sure that the yield premium is there. But it's not. So an example of this local to Sydney is we had in Australia, commercial office space, typically in Sydney, was on a 4% premium. And our rate was at 0% last January. The rate's now 4.1%. By simple logic, our yields on those commercial properties should be 8.1% because it's gone up 4.1%. But the yields on those commercial real estate properties are selling at 5.5%. So there's a huge amount of air or rubbery numbers between those two figures. And I'm like, I don't have any confidence to put any money in that right now. But if someone wants to sell me an asset for maybe an 8 or a 10% yield, then I'll look at it. But the numbers at 5.5% just don't stack up to me. And we had one of our largest property funds in the country 3 weeks ago sell a property for 17% below what the book value was. So, I mean, the numbers don't reflect the economic reality of the situation right now. And I think this is across the board in equities and property right now. So investing, it's very tough. And this is where, for me, there is some saving grace that Bitcoin is a completely impartial option that is completely void of the existing system. So every other asset that we work with, stocks, bonds, commodities, property, and the like, are all in the system. And Bitcoin represents something that's outside the system. So it's, I think, a huge opportunity. And we talk about this with clients to get a significant weighting for them of starting with 5% and then build up to as much as you're capable of sleeping at night with, because the risks inherent with Bitcoin are known relative to the risks in our existing system. We just don't get told what the real story is, which is very difficult to make long-term investment decisions with.
It's an interesting perspective. Known risks versus unknown risks and uncertainty. And people think about Bitcoin as being risky and uncertain. And I mean, it's been doing the same thing every 10 minutes for a long time. Pierre Rochard is really good on harping on that point. And it is the least riskiest thing I could think of, and especially once you learn and understand about it. You mentioned Sydney. I love the city of Sydney. I think I got to spend 5 days there about 20 years ago. I absolutely adored it. But thinking about outside the system, how has Bitcoin changed your life or changed you?
In a deeply profound way, Cedric, working in and looking around what I do, I would be very depressed knowing what I know if I didn't understand Bitcoin, I've got to say. The incongruency with what we're being told to what's actually happening is very difficult to place any meaningful trust in. So I think across all parts of society, we've got a degradation of trust. To me, I feel very fortunate that I have found Bitcoin, and it gives me hope for a better future, which I think is one of the most beautiful human qualities that one can have. It's really critical to human flourishing and endeavoring to have that hope. And this is what, to me, Bitcoin brings to the world. It is the opportunity to make the world a better future. Have a better future with the world. And without it, I'd be really despondent, because I'd probably be a gold bug, and that hasn't worked out too well for gold bugs. It's been really hard. So, yeah.
Kind of curious, then, what do you think is do you think there's a Bitcoin golden age coming, and what would that look like? And do you think you and or I would get to see it?
Yeah, I do. I think there is an age, like a Bitcoin golden age coming. I look at what's happening on the exchanges. That is something that really excites me. The fact that there are coins running off exchange means that we have hopefully the opportunity to avoid the capture, the regulatory capture that the gold market has had. So the paper markets have captured gold, and this is where, being a bearer instrument, it's so critical to self-custody if you want to see price appreciation and avoid that. It's going to be a really interesting future. And I think with Bitcoin in our lifetime, I think in the next 20 years, we will absolutely see a golden age for Bitcoin, which will totally redefine humanity. It's just, a matter of being patient, because what's really interesting about the pet rock, the immovable rock that is Bitcoin, is that it does not bend for anyone, and slowly but surely people bend to it. So I think 20 years is enough time for us to see broader society understand what this thing is and bend to it.
Yeah. Well, I love what you're contributing to the space and your ideas. I want to read a little bit from your website, from the Bitcoin Advisor. So a lot of us might be having these questions, how can I guarantee the security of my Bitcoin? How can I shield my Bitcoin assets from the unexpected? What happens to my Bitcoin assets after I'm gone? How can I educate my family about these investments? At the Bitcoin Advisor, Peter's primary mission is to address these concerns and more, guiding you every step of the way on your Bitcoin journey, wherever you may live in the world. We could probably do a whole other show on some of these topics. I want to get into it a little bit, though. I want to read your personal mission. So Peter's personal mission and what he's passionate about is helping anyone and everyone get their Bitcoins off exchanges and ensuring they have a workable Bitcoin estate plan protocol to get their self-custody Bitcoins to their loved ones in the event of death. He has developed a system and protocols to ensure self-sovereignty with multiple redundancies and backups. And he shares all that they can do for clients at a particular link on their website as a way for others to use as a checklist of best practice. He wants to share this as it's a protocol he's used with multiple clients who sadly have passed away, but were self-custodying. And he's proud to say that none have lost a single Bitcoin. His hope is that anyone self-custodying can leverage off what he's done for clients the past 7 years to improve their own setup. Some of the topics that, maybe we can put a show together on the future is just around, state concerns, estate privacy, death taxes, best entities to hold Bitcoin, mitigating risk, divorce concerns, ensuring smooth transfer to beneficiaries, jurisdiction and tax sheltering, Bitcoin inheritance planning, time locks, multi-sig scams and frauds, probate concerns. I mean, all these things, I think what my biggest concern right now is for a lot of plebs, myself included, I'm just going to throw everyone in there, is, the hope we have, and maybe even the short-term hope we have for Bitcoin. And obviously everyone wants to talk about how fix the money, fix the world, and all these other things, but price is very important, and people are allocating based on probably price hopes or predictions, and I fear that Bitcoin could run up to 150,000, 250,000, and plebs put their coins back on exchanges and sell to BlackRock and Vanguard and Goldman Sachs, and in the hopes that Bitcoin will have another typical cycle and fall 80%, and they'll buy back more or something like that, and not care for and save and think about the value of each and every sat, and I understand people are going to have life events, both positive, weddings and marriages and kids, and negative, and we'll need money or whatever. But I'm talking about the greater value here being accrued. I hope all of us are able to carry into the future as far as possible. And what you guys are setting out to do, I think, is helping people get there. So I'll leave it to you for any parting words and last thoughts, and to let people know where they could find you and your work.
Sure thing. Well, thank you for that detailed analysis of what we do. It is my sincere hope that everyone has their Bitcoin well looked after, that they have an estate plan sorted out, that if something were to happen to them tomorrow, there was the ability to recover those. Because I think from a personal perspective, anyone who's listening to this now has done a huge amount of work to get to this point in time and is clearly deep down the rabbit hole. And what has kept me up at night, and part of the reason for sort of bringing this forward, is the fear of people losing those coins. And this is why we make all of our IP available to anyone who wants to implement it. And if you don't want to implement it and you want to pay us to do it, we'd be happy to look after you. The collaborative custody, I think, is going to be a big thing that moves a lot of people into self-custody and gives them the confidence to do it. And that's something I'm really pushing forward with, that even if you do it with us or someone else, collaborative custody has a lot of benefits that I think will become mainstream or help on board the next 10% of the population. So, Cedric, thank you so much for your time. I really appreciate sort of you giving us a chance to discuss this, and if anyone's got any questions, you can reach me at Peter BTC Advisor on Twitter, and that's advisor with an ER, or thebitcoinadvisor.com website. So thank you so much.
Yeah, man, for sure. My final thought, I mean, this has been so dope, but my final thought is I think a lot about like rhinestones, you know, from Safe's work and VJ's work, and you know that those islands out in, I don't know, South Pacific, and they did their accounting through putting stones in the village, and the stones were generally speaking either large enough or public enough, transparent enough, and everyone had enough integrity. You know, you weren't going to steal anyone's stone.
Yeah.
And I think a lot about now with just passwords in the internet, and people feel comfort, you know, if someone were to take their stones or their money on from Bank of America or something like that, Chase, they can get it back. But I think there's also still this sense of integrity where people aren't, I'm not talking about all the crime and violence we might see on Twitter and online that's happening, or either we're hearing about it more or it's happening more or whatever, or sort of where society's going, but just in general, or just the idea of the notion, just people aren't always looking to take other people's things.
Yeah.
I'm not saying human that's not a part of human nature, and I'm not trying to go down that rabbit hole, but just in general, like, no, people aren't coming to take my home and be like, ha, I took it from you, and everyone knows. Yeah. You know, and how much do you think, and I think people are trying to balance that though with Bitcoin, though, there's this very much this sentiment of like, your shit gets taken, it's gone. Yeah. And that's true in the sense of the ledger and hacks and things of this nature. But I don't think it speaks to greater humanity per se. When maybe people are on a Bitcoin standard, there'll still be crime and violence and people theft. But I think in general, just like in the dollar world, a large majority of people are trying to earn their own way or create value or get it maybe just without blatantly taking it. Yeah. You know, but I think people are trying to balance that now with like, how much do I tell my relatives and my loved ones, or, you know, or a third party or a lawyer, like, what do I do? Like, how do I balance that? What do I share?
That's the $1 million question. And what is awful about this is there's no solutions, only trade-offs. And, you know, if you're here listening to this, like, you're probably deep down the rabbit hole, right? So I don't pretend to tell anyone how to set up their own.
Can you maybe tell one story of a client who passed away and things worked out?
Sure thing. We've got a couple. I've probably got a comical story that I could share about a client who didn't pass away. But the security protocol we go through in collaborative custody is that, you know, we've got 3 key holders in a quorum of 2 or 3 multi-sig. Typically, we use a software provider, whether that be Unchained, Nunchuck, Casa, choose your own adventure there. So they're a key holder. We set up a client with a hardware wallet, and that they become a key holder. It's their account, so they own it. And then we hold a default key. And there are some provisions in there that avoid us colluding with the software provider. We had a very funny incident where I got a call from a client on his deathbed, and he said, like, literally just awful. I thought it was immediate, like thought he'd be dead in a week. And he said in a very tough tone, "Oh, Peter, I need you to get my Bitcoin to my children as quickly as you can." So we went away, we spoke to the children, got their hardware wallet set up, got their account set up, all ready to go. And then within a week, maybe a bit over, he'd made a miraculous recovery. Thank God for that. And his daughter was walking out the door and from his place, and she said, he said, "Where are you going?" She said, "I'm just going to see Peter to move the Bitcoin." And he'd forgotten in his state previously that he said, "Move it." And he very quickly made it aware that she was not privy to that Bitcoin. She said, "No, you are not going there. you sit back down." So that's a funny story about something that didn't have to happen, but we've also been through experiences where clients have sadly passed away, and what we've done is we've basically been able to, with the executor of the estate and the beneficiaries, create whole new accounts. And fortunately, there were sufficient instructions for the estate that they held a key. We were able to, together holding 2 of the 3 quorum, move those Bitcoins to a new vault and a new setup that was in the estate's name. And so we haven't lost a single Bitcoin. And this is where, to me, collaborative custody or multi-sig solves a lot of those single points of failure. And I think it's critical having multiple points of failure, multiple redundancies, multiple backups. And this is where, for me personally, the passphrase notion terrifies me, because I know what I'm like with my password managers. They're, difficult to remember. And the ones I use, if I don't get it right, it's see you later. You've got to do it again. It's like, and by do it again, you've got to set up a whole new account. So it's very tough with that capacity. And with a single wallet, my concern is that you don't have any checkpoints or tripwires set up that if your seed words get compromised, you don't have a check to know that they're compromised until your wallet's emptied. Now, that is a terrifying thought. And this is where one of the neat things I think we do, which is cute, but it serves a purpose, is in that multi-sig quorum, what we like to do is we leave a little bit of Bitcoin dust in there. Meaningful amount, but not too much. But it's kind of an opportunity that if there's a bot who's just web crawled and found your seed words, they're going to take that Bitcoin. And part of the things that we check is, okay, was that Bitcoin still in the wallet every month or not? Well, if it's gone, we kind of have a compromised key, but we haven't got a compromised vault. So we get to then replace that key, create a whole new vault, and we've now basically created a vault that, or we've recreated the integrity of that vault, and we know that that key no longer is in it. So there are all these things to think about and consider, which is just, it is literally, that's probably another show in its own right to think about all those trade-offs. But I really urge people, we're here now, it's going to be worth a fortune. Please give it some thought and make sure that, you've got things sorted so you don't lose your Bitcoin on death. So think long and hard.
Yeah, and take care of those sats. Peter, this has been so dope. Thank you so much. Really appreciate this.
Thank you, Cedric. It's been a treat for me.
Hey, that's a wrap on today's episode of the Bitcoin Matrix podcast. I hope that you found it informative and engaging. Hit us up. We'd love to hear your feedback. I'd like to thank you and our sponsors for tuning in and supporting the show. Keep building, keep stacking, and stay laser focused out there. This is Cedric. Peace.